We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the government has been
Good morning, everybody. Welcome to Coffee and Crypto. Am I on? Did that little squeal you had right there? Are we good? Are we in front of people?
We're in front of people.
Okay, well, why'd you squeal during my intro?
Because the outro played.
Oh,
So I had
that's what you want.
I went, boop, 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 and I fixed it.
I mean, glitch number 2. I don't know how many people saw the thumbnail. They were seeing yesterday's thumbnail. That is not today's, so YouTube's not being our friend here early on in the show, but that doesn't matter because we're still going to have a great show.
This outro was my fault, I could be honest with you.
We can still blame it on YouTube, though.
Yeah. YouTube, why'd you push the button?
Okay, anyway.
You pushed the wrong button, YouTube.
Well, guys, anyway, we're going to keep moving on with this show. This is the question. As that title, we sat there with that title. And we're like, what should we title today's video? And we're going to talk about that key figure in that title is the question mark right there. Because while I don't know if I'm quite ready to say the crypto or the Bitcoin winter is over, there are people starting to suggest, based off of what we saw yesterday from the Fed and based off what we're seeing from the GDP today, this is a question that a lot of people are going to start asking. Is the winter over? And it's not as simple as just saying yes or no. So we will be exploring with that today. We got TechDev on the show. Some of you might know him. He is big over on Twitter. So make sure I think his link's in the description down below. Go follow him on Twitter, but he is going to be coming on here very shortly. But I'm joined by two very, very handsome gentlemen here on set. I got T-Shroom to my right. I got Smay in front of me. How are you boys doing this morning?
Doing pretty well. Pretty well. You may not expect that from me, but I'm doing pretty well.
Would you say you're doing about as good as you deserve?
Yeah. Right on par, as expected.
Wow. Good.
Yeah.
Smay, how are you?
Changing it. New day, new intro. Yeah.
I'm doing good. I don't have any coffee for my crypto, and I'm gonna need a little bit of coffee here soon.
More coffee than
Or
more
you're gonna
crypto than
see,
coffee.
or you're gonna see this.
Like slumped Smay.
Because slump Smay, exactly.
Do you at least, are you bringing crypto to the space today's show?
I am.
So
I always bring crypto.
You're batting 500 for the show.
That's right.
Yeah. That's, take your wins where you can get them. Guys, I'm excited about today's show. I'm excited about the next couple of weeks as we continue to cover this space. Yeah. But we always want to start the morning off. Just get you guys loose. Grab your coffee. We're going to jump into some crypto, but, love having fun with you guys. And speaking of having fun with you guys, Smay, what is your favorite thing to do every single morning?
Wake up, Tim.
Oh, good. Because that's sometimes you don't.
Because if I don't wake up, I don't get to engage in my second favorite activity.
Oh.
Which is getting some water. And then if I don't get some water, then I don't get to engage in my third favorite activity, which is driving to work. And then if I don't drive to work, I don't get to engage in my fourth favorite activity, which is, in fact, saying hi to Tim and T-Shroom when I walk in. And then if I don't get to do that, I don't get to do my fifth favorite activity, which, in fact, my fifth favorite activity, I'm sure you guys think you know what this is about to be.
I was going to say, how long is this going? Because we do
Green
have...
names! Green names!
Okay, good.
So,
We got to get the show
it's
going.
green names.
All
so
right.
we have Agent Gold. We have GS. We got Elliot Locke. We got Mitch Shaw. We got... who else we got here? We got Kelly Kellum. We got Matt C. We got Sultan of Salt. We got JoJo. We got Lynn Peoples. We got Crypto JMP. We got Justin Eubanks. We got GoGo CJC. We got Veronica Gainey. That's the one I haven't seen in a while. And then we got Tristan Williams, and we got Grand Refig Incorporated and all the cool guys. And we got Dennis Pizarka and Cyberfix Online. Yeah. All right, guys. That is all the green names. And by the way, I was joking. It's not my fifth favorite activity. It's, in fact, my first favorite activity.
I figured. I kind of figured there was a bit going on there.
Back to you, Tim.
And that bit exceeded 5 seconds. So.
Well, I feel like I deserve at least 15.
I feel like it exceeded 15 quite heavily.
Well, give or take.
It's all right.
Give or take.
We're about to jump in here with the
seconds.
market pulse and then get TechDev in here in the next 10 minutes. But first, we do have to give you a word from one of our sponsors, and this is a great sponsor, especially with everything going on in the space. Yes, Bitcoin is up, but we're continuing to see exchanges come under fire from not only the SEC, but also the Treasury is starting to get involved. So if you are somebody who's sitting here wondering, all right, how do I make sure that I don't get in trouble? You're going to want to go get a ledger. Go get a ledger today, and guess what you can do with that ledger, that cold wallet? You can get money paid directly into that ledger via Hedge, and that is a business that helps you connect with your company, and if you want to be paid in Bitcoin, in crypto, whatever you want, and not have to pay the exchange fees, and in fact, skip exchanges altogether because you want to protect your money going straight to the cold wallet, you can set that up via Hedge to get part of your payment, part of your salary in crypto. And this is an interesting topic. We're going to be talking about more today, more than likely in the afternoon. And then again this afternoon when I go on Cointelegraph and I'm interviewing our special guest over there, we're going to talk about the future of crypto and its use case, not just as a store of value, but as a medium of exchange. But one of the best ways that you can be using it as a medium exchange is if you're being paid in it. Make sure you sign up with Hedge. There's a link in the description down below. Go check them out. We absolutely love them. Smay, do you have Hedge yet? No, you don't yet?
Not yet.
We're going to sign you up.
I'm getting signed up.
Sign you up so I can pay you in Bitcoin.
Pay me in Bitcoin, please, Tim.
I would love it. Well, with that being said, let's go ahead and jump over. And before I go to T-Shroom, I just want to do a quick update because I'm not going to be doing much technical analysis. I'll do some in the discussion section. I'll do technical analysis. But I'm going to let TechDev really show his charts and what's happening. So real quick, I just want to update you guys what's happening. We obviously jumped up after the reports yesterday. We just broke right back through the falling wedge. So we were below it, broke through it, came up. You'll notice there's two different resistance levels that are key. I want to just point this out. The first one is this ascending level of resistance that had been forming our bear flag. The second one is this flat level, this blue line that we kind of set after we had this little initial pump of supply. You see that green wick right in here that kind of came back up and set that tone right there around 23,200 or so. We also kind of are bouncing right around that line. So keep your eyes on Bitcoin as we're wrestling with that resistance. Here's some good news, and this will be the last thing I say from my Bitcoin technical analysis. Then we'll go into market pulse. Is anyone who's sitting here saying, well, we're still in this ascending trading channel, and Tim, are we in a bear flag? This, I told you guys in a video a couple days ago. If we had come down here and broken, I do think that just from here to here, those of you who are watching, just from the dates of the 18th of June up to about right here on the 26th of July, if we had broken bearish, if we had seen 100 basis points and then Bitcoin crashed, I still could have seen us with a technical analysis saying, hey, this is a bear flag where we have a chance to go down to 13,000. Now that we've rallied back up and we're hitting resistance, I told you guys in that video, now I do believe, it is my opinion, and I don't want to speak for every technical analyst out there, but it is my opinion that this flag is now way too long for this flagpole. It is unbalanced, so I'm not too worried right now, and you're going to hear more about this later on the show. I'm not too worried right now about us crashing down into those lower teens. I'm not saying it won't happen down the road, but I think when we talk about that Bitcoin winter, whether the winter's over or whether the winter is just kind of getting a warm influx of weather, I don't know how we're going to phrase that one, but I think there's a good chance that Bitcoin could at least at worst be hovering in these regions, not dropping any lower. We'll talk about more on that later, but let's do a really quick market pulse from T-Shroom. What is happening in the space?
Yeah, well, thank you, Tim. I actually agree with you. I think Bitcoin and Ethereum are just showing so much strength right now. It's hard to picture them going down to the teens, but life is full of surprises, and the economy certainly is. If you'll go to my screen, we will hit the king of the economy here, the GDP number, which is not looking good. It's printing negative again. U.S. gross domestic product contracts 0.9% on an annualized basis in the second quarter, following a 1.6% decline in the first 3 months of the year. 2 consecutive quarters of negative GDP growth is informally called a technical recession, but the government has a broader and more comprehensive definition that they're remembering about recently. The deteriorating economic outlook may lead Federal Reserve officials to adopt a more dovish stance in the coming months to avoid a significant downturn. Tim, what are your thoughts on these GDP numbers?
I mean, so first of all, they're higher than what we thought. Second of all, I mean, do they mean anything at this point? It sounds like the government and the Fed don't really care about them as much. I mean, I'm not saying they completely don't care about them, but they're not looking at GDP. they're kind of saying that as a secondary aspect of what a recession is. Now they're looking at job reports. And again, the one that I don't understand how you quantify and understand what's happening is people's usage of credit cards to fight inflation. So, good news. I guess GDP doesn't matter anymore in the face of the Fed.
Yeah. Well, and just to be clear, you said they're higher than we thought.
They are.
Meaning
that they're greater. Yeah.
The GDP.
Yeah. We had a bigger loss. Yeah. Good.
Right.
Good. Take care of what the words are. They're not higher. They are lower. But what I meant by that is they're stronger in the negatives.
Well, you're not the only one who didn't get it right. If you go to my screen, Tim, or Smay, whoever wants to go over.
I have control over
whoever
that.
wants to go over to my screen. Over 202 million in short Bitcoin and Ethereum positions liquidated amid the bullish move. So, Tim, you're not the only one that got it wrong here. To the tune of $200 million were liquidated. That's pretty rough. With Bitcoin and Ethereum enjoying a hefty gains after the latest rate hike, traders shorting the leading cryptocurrencies were caught out, and they were caught out to a big margin. But and you can leave the screen now. One theory that we've been working with is, when will the attention from the crypto and the equities communities go ahead and stop taking the Fed rates as the primary signal for risk on and risk off? And one theory that's been going on is, well, what about when this White House administration goes ahead and tries to take the lead? Well, now we're seeing that happen. This comes from ZeroHedge.com. Manchin and Dems reach deal on reconciliation package, calling it Inflation Reduction Act. Senator Joe Manchin on Wednesday announced that he's reaching a deal with Senator Chuck Schumer to advance legislation amid a combating inflation by lowering healthcare costs and paying down the national debt. We must be honest about the economic reality Americans now face if we want to avoid fanning the flames of inflation, he said in a statement. At its core, the purpose of reconciliation is to get our economic and fiscal house in order. Contrary to foolish talk otherwise, America cannot spend its way out of debt or inflation. So some very, very conservative words coming out of the lips of Joe Manchin. Very interesting there. But overall, the main takeaway from this is that this bill, which is essentially a reincarnation of the Build Back Better plan, this could go ahead and take control of the media headlines, and this could be what is traded on up until the rest of the year through those primary elections. I'm not saying it's going to be, but it could be. Tim, what's your take on this? Do you think that this big government bill could totally distract the market from the Fed story, or do you think it's not big enough?
That's a tactic that's been used several times, is distracting from the bigger narratives. So I wouldn't chalk it up to being too small just yet. Whether someone deems it too small or not, I think I've seen that, and I think a lot of us have seen that several times. When there's really a story that matters, that's affecting U.S. citizens, there always seems to be some other fluttering piece that pops up that the media does a good job of trying to distract eyeballs over to. So again, this is my tinfoil hat. Absolutely, I think this is kind of a, oh no, the kids got upset, let's do something to distract them so they don't get as upset anymore type of story.
Yeah, that's my take, and I don't know if this will be the story. It could be something else. Could be something coming out of China, or possibly escalation or de-escalation of the war in Ukraine. But this most definitely is going to catch a lot of eyeballs in the short term, because Joe Manchin is on board. As you'll recall, the Build Back Better plan was stopped, did not get passed, because Joe Manchin and Kyrsten Sinema were opposed to the bill, and though they are Democrats, they held it from being passed. And so now that Joe Manchin is on board from the get-go, this bill has a lot bigger chance of passing. And while it isn't necessarily getting translated into the media as a big porky bill that's going to be able to stimulate the economy, this is something that's coming from the Democrat side, so it may be treated as such, and could be overall a bullish wind in the sails for the ship of equities and potentially crypto as well. But it's yet to be digested in the media just how this is going to affect the economy. But we spent enough time on that. Another big development is Ethereum deploying its 10th shadow fork in its build-up to the merge. So we're not going to spend too much time on this, but this is just encouraging. The successful test keeps the merge on track for a debut in September 19th. So just staying on track there for what Ethereum kind of has set out in terms of their timeline for that merge that everyone is extremely bullish on. And as we saw at the last week, and even the toward late week before that, man, we saw Ethereum really start to move on this merge news. So yeah, really, really exciting stuff. Well, that wraps up the Market Pulse here. Thank you all for joining me, and let me know what you want to hear about in the Market Pulse at T-Shroom if you're interested.
Well, thank you so much, T-Shroom. Before we jump in with TechDev, let's go smash that like button. We got almost 800 people watching with 179 likes. I know those views are going to go up, but the likes need to as well. And if this is your first time here, make sure you smash the subscribe button as well for daily content. The last thing I'm going to answer anyone asking where is Jebb. If you have not been here in a while, welcome back. But Jebb has been sick. His wife actually had a miscarriage about a week and some change ago, and then they got COVID while in the hospital. So that is why Jebb is gone. But his team is still here. We're still keeping the boat going. So smash that like button. Be continuing to pray for Jebb and his family. But with that being said, we're going to go ahead and bring on TechDev, and I want to get him to open up his charts and I know he does a lot of on-chain metrics and some charting, and hear what his thoughts are about this crypto winter, this Bitcoin winter. Are we out of it, or do we have a little more to go? I know he has some interesting theories that some people agree with, some people disagree. But first of all, TechDev, how are you doing this morning?
I'm doing great, Tim. How are you?
I'm doing great, man. I'm excited to have you on here.
Yeah, really appreciate being here. Thank you. Been a fan of the show for quite some time, so
Awesome.
it really means a lot. I'm sorry to hear about Jebb and his family. I hope they're doing okay.
Yeah, no, I actually got to speak to Jebb yesterday. So again, he's doing, I think, he's doing a lot better. His wife, I hear, is still really struggling. So, at this point, I don't know if we can give a day exactly when he'll be back, but hopefully it's sooner rather than later. But yeah.
Yeah, for sure. For sure.
Well, one of the questions I want to ask you. So I've been following you on Twitter. For anyone who doesn't know or doesn't follow TechDev, it's at TechDev_52. Make sure you go follow him because he has some very interesting things. But I was following and then also watching some interviews you've done with other people. So I want to hear. I've seen other people discuss this topic, but it's this idea that the top of the Bitcoin bull run was actually back in April of 2021. So I want to kind of work with you on that and hear your thoughts about why you believe that that's the case and what that means about now the bottom of the bear market for Bitcoin, when and what that should look like.
Sure. Yeah, it's very easy, I think, to get caught up in this nomenclature of bull bear, especially when we, to date, in Bitcoin's history, have seen a fairly cyclical movement in these euphoric runs, followed by what end up being these very panic-filled crashes. And I was certainly guilty of that. I've blown plenty of midterm calls. The market did not play out as I expected it would on the midterm, going back into mid and late 2021. There's no getting away from that. So it's how the market goes, especially with someone, I try to be more focused on the long term. So,
yeah,
you don't get as many at bats to have your views play out when you're a more of a long term focused person. But at the end of the day, it doesn't matter. I'm not in it to be right or to inflate my ego or to get predictions spot on. To me, it's about growing your wealth and protecting what you have and trying to get financially the most out of this market that you can. I mean, as cruel as it sounds, we're in it to take one another's money. That's what any speculative market is about. So you're for every long there's a short, and to me it's more just about, and the last few months have taught me this to really have a diversified strategy in how you approach this market, to recognize that everything's probability based. And so long as you have a plan for either direction on the long term, you're probably doing better than the majority. So anyway, back to the bull bear topic. It's again, it's very easy to get drawn into that labeling. What I mean when I say the bull run ended in 2021, I'm referring to what I believe is an impulsive wave. That's traditionally, bull markets can exist on a variety of timescales. So if I zoom out and look at a chart like this, I have spent a considerable amount of time reevaluating how I look at the market on the long term. And I, whether it's coping or not, have gotten away from this idealistic kind of repetitious parabolic move that we expect or expected out of Bitcoin every 4 years. And I much prefer now to look at it as a series of impulsive and corrective waves rather than these arbitrarily defined cycles. So these impulses and these corrections can exist on a variety, from anywhere from an hourly time scale up to a monthly time scale. They can exist on a number of degrees and a number of different positions in a given wave. So how I view my main idea now for where I see Bitcoin going, and I believe ever since the bottom of the 2015, what we would call the bear market, which was just a correction, like any bear market is, sharper corrections, ones that have lower highs and lower lows continuously, are more traditionally thought of as bear markets. But to me, any correction is a bear market, even if the first corrective move up after the fall ends up making a higher high, like we did over here. But anyway, ever since the end of this 2015 correction, I believe we have been in what I would call another cycle degree impulse, where the move up in 2017 was the wave one move of the primary wave one of this cycle wave three. Then the 2018 bear market down was the primary two. And now we are forming the third primary impulse wave within the larger third cycle degree wave. And I believe that since April 2021, the market has been in a corrective wave where the move up to 69K was the X wave of a WXY correction. And there's various pieces of evidence I point to support that. But
real quick question for you, TechDev. Is there ever been, so I know Bitcoin has a short history. If you were to look at any other stock, is there ever a case that we've seen in the history where one of the XYZ corrections, or is there ever another case in history where one of the peaks actually went higher than the original peak?
Oh, there's tons of examples. Yes, not only in specific stocks, yes, but also in the major indices. You see, the flat correction is the one where you have the higher high within the corrective wave. Now, whether it's a regular flat or an expanded flat or a running flat, which are the rarest kinds of flats, those are technically called ABC corrections. And there's a very specific set of rules that the waves have to follow to conform to ABC. So I don't see those in this move anymore. That's why I'm calling it a WXY, what's called a combo wave.
WXY,
I think it follows the rules of a WXY much more cleanly than a true 335 ABC flat, but it's still flat in character as I describe it, where the X move and ended up being higher than the impulse top. And yes, you see countless examples of this in all kinds of assets. Google actually has a very interesting chart. If you go back to the early history of Google, there's a gentleman on Twitter, Gerd Van Lagen. He's a friend of mine. He shared some interesting takes looking at the early history of Google and how it had a log growth, kind of decaying log growth curve portion to its early history before it had a major correction down and then continued to rise up after. But it has a couple examples of these flat type corrections. Yes, it's nothing new. In fact, it's the most common corrective wave form.
Gotcha.
Well, I shouldn't say that, but it is a fairly common corrective wave.
And I think that's good to know.
Zigzag or sharp is.
That's good to know, because I've seen a lot of people when they're arguing with that theory that the top of the bull run was actually back in April rather than in November, that a lot of people will be like, oh, we've never seen that before. It's like, well, it's good to know, Bitcoin, again, as Bitcoin's king of crypto, it's the oldest crypto, but it's still relatively young as an asset. So just looking at the history of Bitcoin isn't enough to say, hey, this is impossible or improbable. So that's really good to hear. I want to transition to the last question I have for you, and then I'm going to open up to some chat questions for you. So with this narrative, what you're seeing and the timeline and everything, do you believe that the bottom is in? If yes, how fast do you think we're going to see a rally come? And if the answer is no, when and where do you think we could possibly get to? And I want to preface that by saying, obviously, no, as you even said earlier, nobody knows 100%. So obviously this is not TechDev giving his official answer that if he is wrong, that everything else he ever says is wrong. He's just giving his opinion based off of the data he's seeing. But what are your thoughts about the bottom being in or not?
Sure. Yeah, real quick, I do also want to just mention that Bitcoin does have a history of its own flat structures back in if you look in the 2017 wave, there's a couple of higher high flat corrected structures. We've just never seen one on this scale before that has lasted 15 months.
Right.
So that's definitely a unique
sense.
bit here. So as far as everyone wants to know when bottom, when top, where top. I don't know. It's probability to me, and I base my investments on that probability on the different time horizons that I invest in. So I have a whole portfolio that my long-term bias thesis is behind. My long-term bullish thesis is behind, bullish bias. And then I have a shorter term swing trading portion that fits in with the longer term. And I try to manage my risk with that shorter term strategy. So even if I'm wrong and my long-term bullish bias doesn't play out as I thought, I still have a half of my strategy and a half of my portfolio that is much more short-term oriented, much more risk managed. And with the back testing of my strategy has proven to yield strong returns in both uptrends and downtrends. So moving to a more diversified strategy like that is something I've put a lot of effort into since I got a few of these midterm calls very wrong in 2021. As far as the bottom being in, I think there's a very high possibility that 17.5K does prove to be our Pico bottom. I say that for a lot of the reasons that are on the screen right now when it comes to the structure of the corrective wave, when it comes to interactions with MAs that we've seen before, and when key MAs have crossed, and when that has signaled bottoms in corrective waves of this duration before. We saw the Pi cycle bottom cross flash just a few days ago. There's on-chain data that shows the 1-year holder wave rolling over, which has historically coincided with bottoms already being in and a next impulse wave being ahead of us. So yes, I think from everything I'm looking at, there's a decent chance 17.5K was the bottom. And as far as what I'm looking at here, I mean, I know it's kind of become common, I think now, to not expect all-time highs until after the next halving. And certainly that could be the case. I'm still of the belief that we are in this type of long-term wave structure. And though we did have an overextended wave 3 that has now, with this wave 4 down, come back to this common trend line, similar to how it did back in the first cycle degree wave. I think that we did overextend. Yes, we popped up significantly higher than we did back with this wave here, and that's caused the correction to correspondingly bring us all the way back down. But I still think that the timing of this wave structure is intact, and that we are due for another impulse wave to bring us to new all-time highs in 2023. Where it goes from there, I have my theories. I think that we top, between 80 to 120K. I'll put it out there, and now 100% it won't happen because I'm saying it, but that's fine. I'll put it at wave 5, 80 to 120K in 2023. Then I do expect a correction back down to possibly to take more of a sideways nature. So we might bottom 30 to 40K in 2024, and then have a euphoric blow off top, maybe over 200K in 2025 to complete our primary wave 5. But that the further out, the more waves out you get, the more pure conjecture it is. And we know that, if we are due for a generational crash in equities and that starts in 2023, then I think things become a lot murkier for crypto after that happens. So I'm most confident in what I see happening into 2023. After that, it starts to become a little bit more of a crapshoot. And I intend to be out of the market after this next impulse wave top, and then just see what happens.
Yeah. So let's say you're right about that. And then, we have, 2 more kind of little bull runs, but then that blow off top in 2025, do we then break that line that I'm seeing on your screen? Do we go down? How far down do you think we go after we break that?
Yeah, that's That's a great question. I mean, there's another interesting way to look at Bitcoin, and this is on a log time scale. So this is something I've been exploring more. We plot price on log scale often, but rarely do we plot it on time on a log scale.
Okay.
And when you do that, this is the log regression curve that we see all the time. It's just on a different trajectory now because you've got time on log. And to me, this shows a clear kind of log parabolic support that is one reason why I personally find a contradiction with folks that say they're long-term bullish, but also are looking for 10K. Because if we get to 10K, to me, that really kind of breaks
we broke that
12-year support and possibly is new paradigm time. So I personally would not be gung-ho about being super long-term bullish if we indeed get down to 10K. I know that might seem like a contradiction to folks, but it's all about key trends and key supports over the long term being broken. And just because, so anyway, that's just an aside. But yeah, I mean, at some point, I think this is going to break. Yes, whether you look at it on this reference frame or on this one, I think that this trend line potentially could be part of this longer cycle degree third wave, and that just like its trend line over here in cycle degree 1 was broken by the cycle degree correction that followed. I think that certainly could happen here. There's no telling if we do get here and this plays out as I think, and then we get this cycle wave 4. There's no kind of telling how long that could be. I don't think it's going to feel so much like a correction because just like this wave 4 here, wave 4s tend to be a little bit more sideways. So it could just feel like a lot of chop for several years. But I think, in the long term, it's really going to be fascinating to see where Bitcoin goes. I mean, it is tempting to just take these log curves now and kind of extend them out ad infinitum for decades and decades. But I think that's an over extrapolation. I think that we are going to, if Bitcoin survives as an asset for the long term, I think we're going to see kind of an S-shaped curve to its adoption and to its log growth. And what we're seeing right now is that kind of log flattening that could end up being kind of the middle of the S right here. And projecting something like that out decades into the future is probably being over ambitious.
Right.
So yeah, these trends are going to break down at some point. Just like going back to that Google example, when it broke down from its log curve, it went down, nasty looking correction, but then you continue to zoom out, and it's just been a straight line up ever since. So yeah, it's going to be really interesting.
Well, we got time for one question. I saw a couple people with this kind of thought for a question, so I'm going to go ahead and just use JF's question. I'd love to know how TechDev has considered a recession. So with all this coming into it, what do you think? Do you think the recession has any type of change to what you're saying? Are you taking the recession into consideration? What are your thoughts about, whether we're officially in one or not? We did have that second quarter of GDP numbers come out today, but of course we have the government kind of holding off on that definition. What are your thoughts about that one?
Right. Yeah, that's been the question of the last few months.
Yes.
Everyone, the term macro has become a meme now. Everyone is all about the macroeconomics, and while I think it's important to certainly keep that in mind. I do think the best chance you have at probabilistic based investments is going to come from the charts and not from following news headlines and going with what the masses necessarily think is going to happen. So I know a lot of folks think that, okay, we're in a recession now. Bitcoin's never been through one. All bets are off. Crypto's done, at least for the next decade or something like that. Right. And it's certainly possible, but I'm still trying to focus on the charts. And I do bring in charts that I think bring in data behind the macro economy. So I look at the DXY a lot, and I know you guys do too, the dollar index, and I see a lot of confluence in what it's been doing, correlated with what the altcoin market's been doing and correlated with what Bitcoin is doing. And where it is right now, position-wise, is a very interesting one. The trend lines it's interacting with, the extension that it's had from its recent low back down here when the market topped in 2021, and all the signs to me are still lining up to say that while I know sentiment is oriented in thinking that a recession means crypto is doomed, and we very well may have a significant correction after that 2023 run, I still think that there is another impulse wave ahead of us,
Mm-hmm.
and it's going to be when the masses are confident that, you know, the real super cycle is here. This thing's never coming down. Everyone's super bullish and euphoric again at the top. Then that certainly may be when a generational correction comes in. But yeah, I it's certainly possible, right? That I could be totally wrong, but my long-term thesis still is right now that we are going to have a sentiment-driven surge in bullishness, whether it's from a Fed pivot or a pause, that is not necessarily in line with where the economy is truly heading, because I do think that the economy is indeed heading for some real pain here over the next several years. But I think we still have another move here in the speculative space before the speculation catches up with the reality. But again, the short-term position is there to hedge against that and to not put all my eggs in the long-term hodl basket.
Awesome. Well, TechDev, thank you so much for joining. It was great to get to hear your opinion on the market. It's always phenomenal. Again, if you guys don't follow him on Twitter already, make sure you go follow him at TechDev_52. With that being said, though, man, we'll see you next time. Thank you for joining the show. That was it was really interesting. I'm really excited. Within the last couple of weeks, I've gotten to get exposed to a lot of different people's ideas of what's going on. With Cointelegraph interviews. Speaking of, I'm doing one today where again, this narrative is gonna continue. And I know there was a lot there that TechDev kind of jumped into, but the guy I'm interviewing today, his opinion is that we actually are gonna be seeing. Oh my gosh, an Amber Alert! Oh Lord, help the child. Sorry, that distracted me. His opinion is that we're actually going to be able to seeing Bitcoin get stronger through this whole process. That the adoption and the use case of it is going to actually bring Bitcoin to the future. So he is of the opinion the Bitcoin winter is over. Bitcoin spring is here. So make sure if you guys don't have anything else going on, go watch that at 12 o'clock over on Cointelegraph. But with that being said, let's take a second. I think there were a couple super chats that weren't necessarily for TechDev, but we'll answer those and we'll jump into our afternoon discussion as secondary segment discussion.
That's right. That's right, Tim.
Afternoon to me on the show, you know. I segment my whole morning. The beginning is the morning, and then the second half of the show is the afternoon. Anyway, go ahead, T-Shroom.
Absolutely. So CryptoSec Guy, member for 11 months, and a Jedi Padawan said, how can it possibly be cold enough in Florida in July to wear a hoodie? And I assure you,
it's cold enough in the office.
Our AC is cranking high enough.
Nice. I love it.
It's just so comfy to wear a hoodie. You know, it's also a core aspect of my identity. Then we've got Matt C, member for 12 months. That's big, right? That's big. 12 months.
A year.
Probably just about as long as the membership program's been around.
Yeah.
Yeah. I think he entered on day one. OG.
A Jebbai Grandmaster, to be sure.
Yes.
He said, so we get negative GDP for the second straight quarter, but thankfully we're not in a recession.
Yep.
So a hint of sarcasm there, potentially.
A little bit.
Wind Peoples, also member for 12 months. Very big. Very, very grateful for you, Wind Peoples. Jebbai Youngling looks to be saying something to me. T-Shroom, where does the phrase far better than I deserve come from? One of my professors used it often, and I have never forgotten it. Well, originally, it probably comes from just the beginning of time type of thing. But I have been mimicking Dave Ramsey when I say better than I deserve. And then Smay and I started saying it together. And who knows what comes next for the infamous phrase.
Maybe all three of us say it together.
Yeah. Or maybe that's just the entire show. We just repeat that phrase again.
It just becomes a chant.
And again.
Then we start going around in a circle and just better than we deserve. Better than we deserve.
Yeah. I think that might have to be our Monday show.
There,
But and then the last one, Matt C, member for 12 months, and a Jebbai Grandmaster said, so oh no, I already read that one.
Yeah, no. I have the holder just commented though, who he's also been a member for 12 months. He said, "Yeah, boy, yeah, boy." Love it.
What's your
Love
longest
it.
yeah, boy?
I feel like Smay should read that. Well, you know, I should have let you read that in the first place. You want to read that one, Smay?
I feel like you guys gave it.
I feel like we need to hear a
diligence.
Smay version.
The smursion?
The smursion.
The
We need to get immersed in the smurge.
Yeah, boy.
That's pretty good.
There were a lot of eyes, so that might have been the best interpretation. Well, guys, real quick before we jump into that secondary discussion, and we're going to be talking more about the crypto winter, talking more about the news coming out of Washington yesterday with the Fed announcing an interest rate hike of 75 basis points.
Wow.
We're sponsored by a CPA. Oh gosh, my brain is all over the place this morning. A CPA, and he is phenomenal. Anthony Price is a great guy. We use him here at our company. If you're wondering how to handle your taxes, if you're wondering how to handle your finances, the crypto space is evolving each and every day. And guess what? In the past, you can get away with a lot of different things. You can get away with a lot of, there's probably a lot of people out there making some profit and not letting Uncle Sam know about it. But guess what? The government's not going to let that fly this year. So I heavily recommend, if you are not on top of your taxes as it stands right now, you're going to want to reach out to Anthony Price today. Guess what? 20-minute phone call, absolutely free with him. There's a link in the description down below. Go check him out. And yeah, with that being said, T-Shroom, let's go ahead and transition, and let's start breaking down our thoughts about what happened yesterday and what that means for the future. Because when we responded to it yesterday during our live stream, we did kind of hint at, we gotta kind of sit on this, chew on this, let this kind of breathe a little bit. And there's definitely this openness that Jerome Powell left. So he had moments of his remarks that seemed to be actually quite hawkish, kind of implying that they're very open to having higher interest rate hikes down the road. But the point that I still think, after sleeping on it for a night, the point that I still find most interesting is when you break it down and you do some math about some of the comments he said. The first thing is, he said if they could end the year around 3.5, 3.25 to 3.5 on the interest rate, that would be pretty good. All right. Well, guess what? After 75 basis points this month, we're sitting currently at 2.50, 2.5. We have 3 more meetings, which means we're only, in his eyes, it would be pretty good to only increase another 100 basis points split between 3 different rate hikes. What that means is that if he were to come out next quarter with 75, we only have room for another 25 basis point hike throughout the rest of the year before he would say, we're probably getting a little bit too aggressive. Versus, I think there's a lot of people who are considering that this might happen, and I think CME Futures is already starting to predict. We got 8 weeks before this happens, so stay tuned. But they're already predicting with, I think it was a 90% of the predictors are saying 50 basis points is going to be the September hike. Let's kind of break that down. What does this mean for the future? And of course, again, take that prediction with a grain of salt, because within these 8 weeks, we're going to have 2 job reports come out. We're going to have 2 different CPI number reports come out. And of course, the whole thing that really was honed in on by Jerome Powell in this speech and every other speech is they're always going to take into account the data. Now, what the data is exactly and how accurate that data is to be questioned, but I'm going to let you kind of take that where we go, T-Shroom. What are your thoughts about what we're about to see? Do you think that 50 basis points the CME is predicting is accurate, or do you think that that's just kind of the initial response and it's going to change a lot over the next 8 weeks?
Well, I think it's accurate as of now, right? If I'm in the market, I'm thinking we're going to get 50 in September, and then we're going to get 25 and then 25 on into the end of the year. But honestly, 75 now and then 50, that's pretty bullish, right? That's a pullback in the interest rate hiking. It's still a hike, and it's still a double hike. But for the crazy topsy-turvy world that we're in now, post-pandemic, 50 is somehow bullish. And in a sense, I do get it. But yeah, so some of the thoughts that I took away from Jerome Powell's speech yesterday at the old FOMC press conference was he did give himself a lot of room for September. So yeah, right now, I agree with the CME futures. Our number is going to be 50 basis points as of now. But look, we have 2 inflation rate prints between now and then. And actually, I was supposed to do this in the Market Pulse, but we have some dates to watch. So you can write these down, and I strongly recommend you do. Tomorrow, we have the PCE and the Michigan Consumer Sentiment. Michigan Consumer Sentiment kind of sounds like what it is, but the PCE is very, very similar to the CPI. And the PCE is actually the one that the Fed apparently looks at, even though obviously they look at both the PCE and the CPI. You can Google to find out the differences between those, but we will definitely be reporting on those numbers tomorrow. August 5th, you have a labor print, and that's going to be very important, because if any part of those labor numbers look bad, that is going to make the Fed much more inclined to be dovish, and we might even see a single rate hike a 25 basis point hike in September. So that's very important. August 5th, labor print. And then August 10th, the inflation print. So those are all ones we're definitely looking for. Some other notes that I took away from the press briefing, though. The market bought the NASDAQ during the press briefing. So kind of already reiterating that bullish sentiment from the press briefing overall, taking away a pretty bullish sentiment. The Fed no longer mentions the China pandemic lockdowns in the press briefing.
Yeah,
so that's the actual text that they release. Last time that was what they actually led with. So that was the number one reason why they probably not the number one reason, but that was what they were leading with as they were releasing that 75 basis hike decision. So another thing was they were using the White House speaking points in reference to the definition of inflation. So I am here to say that the emperor has now lost its clothes, right? We are now in a place where we no longer are going by the old standards, we're going by new standards. And in the old, not just the Disney movie, in the old, tradition, I believe it's an old parable, the emperor, we are all now just going along with the fact and pretending that the emperor is wearing clothes when in fact he is not. And you can take that for what you will. If you want to explode the comments, there's a legitimate backing to that statement. But then some more notes. Path to a soft landing has narrowed and may narrow further was a big quote from Jerome Powell. That was definitely not bullish. That would definitely be a bearish note. But again, he talked to one side and he talked to the other. He really gave himself plenty of room to make any decision that he wants in September, whether it be 25 or 100. He kind of left all that on the table, and ultimately that is kind of the biggest thing to take away here is that he's got all his options on his table, which honestly, if you're Jerome Powell, that's really what you were trying to accomplish. That and just trying to make sure that you communicate clearly. But so another big takeaway was with the Fed ditching forward guidance, data releases like GDP and inflation could inject more volatility into the markets than ever. So in the past, these data prints definitely move the markets. But what Jerome Powell said is that they're not going to be doing any more guidance in between meetings. So I guess we'll only get the minutes, but no comments on the minutes. And they're going to be limiting the Fed press, any kind of communication between the Fed and the media. We don't know exactly how that's going to look. But he said that that's going to be more limited than it has been in the past. So we'll be looking for the actual data to move markets. So inflation and labor prints and consumer sentiment prints. Those are going to be very important, and they're going to have an outsized effect compared to how they were affecting a market beforehand. So that's really kind of my takeaway. Tim, you might have some more notes, but the kind of question that I think we tackle here is this a recession or not?
Yesterday, Caleb Franzen was talking about how Jerome Powell was really, really concerned with, and he wouldn't get too dovish necessarily because he has pretty much his reputation, his credentials to be worried about. Here's the thing, and I think we actually did see some sentiment from him kind of trying to defend himself. Did you guys, those of you who watched yesterday, did you guys notice he was shaking the whole time? Now, yes, he shook. I think every time we've watched, he's a little older. I don't know his exact age, but, how much of that is chalked up to age and how much of that's chalked up to nerves. But here's what I did notice, that potentially those shakes were a little bit more nervous, more I need to prepare and make sure I'm saying, I'm going to make sure I'm not saying anything I'm not supposed to say.
Yeah.
Because in the past, and he was caught for it, he literally said here 2 months ago, we are not going to even consider 75 basis points until we have seen months of data saying that we need to get that aggressive. Well, that came back to bite him right in the butt because the first question he was asked last month was, hey, Jerome Powell, remember when you said you wouldn't even consider 75 basis points without months? It's 1 month later and we just rose by 70 basis points. So, I think he took that one on the chin. And so that's why in this meeting, he was a little bit more vague, left things a little more open. Also, they've been releasing those minutes, and then people have been speculating based off those minutes. And I think he's realizing, oh my gosh, if we say anything that we haven't 100% thought through all of the repercussions of what's going to be taken from this, then we are making a mistake. So you know what we're going to do is we're going to stay tight-lipped. I'm going to answer the questions the best of my ability and stay vague with them and not really let anyone know what's going to happen. But in reality, when we're listening to him, if we just start to read between the lines, yesterday was a very dovish day. Yes, 75 basis points is still a big number. However, he kind of, again, doing that math, saying that the desired spot to be in at the end of the year is 325 to 350 for interest rates, and knowing we have 3 more meetings and we're already within 100 basis points of that 350, I mean, unless he sees something really, really crazy happen, it looks like that's where he wants to get at. And then here's the other thing. I started to kind of piece this together in my brain. All right, right now they're in denial of recession. The Fed's in denial. The White House is in denial. We're going by a definition that says we're waiting for the job market to reflect it and then people to start borrowing money. That will come. I think all of us know that will come probably very soon. I already saw in chat today multiple people commenting on people already laying stuff off. But anyway, that number will come. But as long as we don't have, as long as the Fed does not think that the job market is in jeopardy, that actually gives them the momentum to stay hawkish and to keep prices or interest rate hikes a little higher, staying maybe next in September around 75. Here's going to be the real problem, and this is where he is going to be up a creek without a paddle. What happens if in the next 8 weeks, the job market, the job numbers come back extremely negative, people are losing jobs, and it's not looking good, right? That would say, okay, recession is now upon us. Even we have to admit that with this new definition. We gotta lower interest rates. But at the same time, inflation goes up. Okay, inflation's going up. The dollar's getting less valuable every single day. Oh no, we need to keep those interest rates high. What's he going to do? He's kind of backed himself into a corner right here. And so I think he's sitting in a corner with the rest of the Fed and the White House saying a prayer that one of those two ends up, one of those two number reports, and there's going to be 4 of them total, but there's going to be some bullshit. Maybe inflation stays at 9.1 or maybe moves down to like 8.9. Maybe the job rate, even though we all know people are going to be losing their jobs and the level of jobs out there that are available are not really high-level positions. It's more like right now, as people start getting laid off of higher positions, they're going to be able to take jobs as waiters and waitresses and fry cooks because those jobs are still available. So is the data on that going to stay kind of flawed and not really report the reality of what's happening in the job market within the economy? So there's still a whole lot of debate, but I am starting to open up to the potential. And I'm going to go to my screen for this one, my chart. Right now we're wrestling right here. We're wrestling a little bit of that golden pocket. I'm going to take that down, though. That's what I was looking at a little bit earlier, and I'm going to do more TA on this tomorrow. Guys, I'm watching all this happen, and I am not saying that I think the bottom is in just yet, although the odds of the new bottom I do think are decreasing every single day. And I'm going to continue to monitor, and my opinion on that, and monitor the charts and monitor the information. Obviously, there's lots of data out there still saying that we could, this could have been the bottom right here. There's lots of data out there saying that we could have set a new one. I'm not ready to say there's not going to be one yet. This would just make a lot of sense for as the economy starts to struggle, the price of Bitcoin moves up and to the right. We start going this way. We start fluctuating between 30 and 20, and we start moving this way. And then later down the road, when we actually maybe get a little bit of handle on the economy and we can raise interest rates down the road, that's when Bitcoin crashes. The question is, how long can we hold this off? So, for example, if we can hold this off into maybe 2024, where we're really worried about the economy, and guess what? This is going to really hurt you guys, because as great as Bitcoin is going up is going to be, if you don't have a job, if you're not making good wages, you're not going to be able to invest anymore in Bitcoin. So guess who's going to be profiting on Bitcoin? The wealthy, the institutions. When regulation comes out and we actually know what we're supposed to be doing with this, and then these institutional investors, they feel confident, they'll be able to buy and Bitcoin will spike. So all the more reason to acquire as much supply right now while you can. But you can't deny if let's say down the road, where even what I'm doing now, let's say this business were to flop and I were to lose my job. Well, at that point, who really cares if Bitcoin keeps climbing? I can't keep acquiring Bitcoin. In fact, I'm going to have to start liquidating some of my Bitcoin to pay my bills. Now, I'm not too concerned about that necessarily, but my point is, even those of you, let's not be too hasty to root for the circumstances to develop for Bitcoin to rally and go up higher, because those circumstances might be at the expense of millions of jobs, maybe yours included. And so this is going to be a real kind of fun next year to watch the rest of the crypto market. And it's not as simple as saying, guys, guess what? The bottom's in for Bitcoin. We could maybe see a rally start fresh and move up to the right. And even like what TechDev was saying, maybe by 2023, we're going to be up to 120,000. By 2025, maybe up, a little closer to like 200 and some, 250,000 or so before we see another dip. There's a lot to be, at play here. And there's a part of me, this is why, as much as this doesn't help the Bitcoin price, and as much as, our company, when the Bitcoin price goes up, we get a lot more views here. We get a lot more sponsorships. We make money, we can pay our bills. So it would kind of help us as our company, but I'm really worried about the state of the economy. I almost prefer for Bitcoin to hover, stay sideways. I would prefer for the interest rate hikes to stay high, to fix inflation. And it's crazy because we don't like the dollar. We want Bitcoin to become the currency, but I don't think that the market's in a spot where we're mature enough as individuals to start using Bitcoin as currency to overtake the dollar. I think the dollar is still really important. So therefore, as much as we hate the dollar, I think that rooting against it and for it to die, if you have a lot of money, that's within your interest. That's within your interest. As we start to move the value of the dollar into Bitcoin, which is just what happens, it's going to happen, the poor are going to be the one that are left behind if we do not handle this carefully and slowly. So, I want to kind of, I'm saying all this to let you guys know, if you are sitting in a spot where you don't care about the power of the US dollar and you just care about your Bitcoin price, there's a good chance that with the recession actually becoming an official in the eyes of the White House and the Fed, that it's going to be good for you. I just really want to stress to you guys, keep your eyes on your neighbors, keep your eyes on your friends and family who maybe are not as fortunate as you, because this, no matter what, this is going to get rough one way or another. I'm sitting here kind of rooting for sideways action for Bitcoin and fix the economy sooner rather than later, rather than kick it down the road. I'd love to hear what you guys think. If I'm wrong in one of my lines of reasoning, I'd love to hear it from you guys in the comments. Real quick before we wrap up today's show, T. Shimmer Smay, do you guys have any thoughts about what we were just talking about?
Yeah. So I saw a really insightful comment, really kind of playing off our title for today in the chat. Said, "Winter is not over, but it stopped snowing." Right, and
yeah,
it can.
That's a good. That's
and
good
I like that, and I want to give credit to who said that. That was D Mill. And so I think that's a good illustration of where we're at right now. It feels like it stopped snowing, but at any time it can start snowing again, and a blizzard could even set in. And that's, to manifest that back into real terms, that's if the job market does start to deteriorate, and we are already seeing weakness. If you really drill down into the actual briefings, into the actual documents that come out with those headline numbers of unemployment and non-farm payroll, you could start to seeing some weakness. You're starting to seeing kind of soften up in those labor statistics. And then the other one, would be if inflation continues to keep going up. And then we learn, as the Fed has already admitted, they're learning a lot about inflation through this. And if inflation keeps going up, even after a third 75 basis point hike has been set in and starts to affect markets, if then we learn that it's actually a supply side inflation issue, in which case the Fed has no tools to really address that. It's just supply chain issues. Only thing that the Fed could do theoretically is to just start to, burn money, just like in crypto, just to literally bring down the inflation rate.
Yeah.
But right now, was it D Mill is right. It's kind of stopped snowing. Like, a lot of folks the CME is pricing in a 50 basis point hike, which is signaling dovishness, which means we can kind of see the light at the end of the tunnel. And maybe we linger here in this optimistic moment and just kind of take it, in stride and appreciate it, but also know in the back of our minds that it could start snowing again, and it is possible.
Yeah.
It's very, very likely that it could start snowing again. But Smay, if you go to my chart, I also have the DXY pulled up, because yesterday the DXY dropped down and made new local lows right here at 106, all the way down from, if you count a wick, that was up around, this thing's blocking it, of course, around 109.3. So it has really come down quite a bit, but it's still kind of hovering around that trend line, multi-month trend lines that it started really in June. And it also has technically penetrated that, but it did resume back up quite a bit. But even more recently, and this is a 4-hour chart, it has come back and tested that. So, really just minute to minute here, we are watching potentially the reversal of the dollar.
Yeah.
And that would kind of make sense as the Fed kind of switches its policy and its rate starts to go down by from 75 down to 50. So that's kind of my thinking is we are still definitely in a winter, and don't expect that winter to end necessarily anytime super soon. The next data point that I'm really, really looking for to detect if we're gonna have a longer winter is those inflation numbers and those jobless numbers, and the unemployment numbers there. So those are going to give us an indication, and the market will react. I guarantee you, the market are going to react to those data points on the 5th and the 10th. So we will absolutely be looking out for that.
I mean, and here's the thing. The good news is no matter what happens, there's going to be pain. And no matter what happens, we're going to make it through the pain, and we're going to come out the other side better. Bitcoin's going to come out the other side better. Whether the bottom's in already, whether there's a new bottom coming here soon, it will make it out better. And I think the best thing that you can do is just walk away from this saying, hey, I have my strategy for both. If we enter into more, if the snow starts to fall again, then I'm ready. I'm ready. That's a great thing because it'll allow me to acquire more. It'll allow the economy to have a little more strength to, come out and, work through this recession and come out stronger. Again, I'm talking about the economy, not the US dollar. Of course, at the moment, they're kind of linked. But if it starts to go up, okay, let me generate wealth because I saw this coming, because I'm ready for it, and because I can acquire more Bitcoin. But do not, I just want to urge people. I know some people are like this, but I just want you guys to know, please, if you are only thinking about your own gains throughout the crypto market, we heavily urge financial sovereignty, where you have control over your money. No one else has a control over your money. But please don't use that as an excuse to just leave people in your wake. I know that's kind of the rough thing about this whole thing with trading. When you're longing and shorting, the game is actually you're taking money away from somebody else. It's just how the game is played, and I completely understand that. But there's also this thing about stewarding money well and being in control of your money, and also leaving behind something that's bigger than even yourself. And so I want to encourage all of you, no matter what happens, if this is a time to acquire more because the prices go back down lower, utilize that, and utilize it for good down the road. Not just for you and your family, but for others around you. In the same way, if we start rallying right now, and if the winter is officially over, and we start to pull back up and go towards that 120 within the next couple of year or so, continue, use those profits, use those gains, and continue to make an impact around you. And because this is not about ourselves as individuals. This is a revolution. We want to see the entire world be flipping into more stable money. And we're a part of that revolution, no matter when and how it happens. Guys, that's all we have for you in today's stream, but we will be back tomorrow. We have an afternoon video coming out today, I believe, on Cardano that T-Shroom's going to be shooting. So make sure you stay tuned for that. I will also be on, today's another full Thursday for me. Cointelegraph here at noon Eastern Standard Time. And then this evening, I'll be on Around the Blockchain at 5 p.m. And then I'm going on Debate Crypto also this evening around 7:30. So make sure you tune in for all of those. Come show support for the Crypto Jebb team on those shows. Guys, that's all I have for you in this video. But I love each and every single one of you, and I will see you in the next video. Peace.
Oh, I got a real good feeling.